Good morning everybody, welcome to Stockradar, Stocks on the Move for another week. Today's date is the 1st of June 23, first day of winter, which we're looking forward to in Melbourne especially. Okay, my name is Richard Lee and I run the stockradar.com.au website for you. Okay, I've come back to a shuddering market. Where does it all leave us? Well, we've got to keep focusing on the good stuff at the moment while it's been pretty difficult of late. I'm feeling great, I'm feeling refreshed. I've had a wonderful visit to Ningaloo and all its beautiful perfection, which we don't sort of always have here so much, but it's, it just tells us how we can get embroiled all this difficult stuff sometimes, and we need to take a step back just to keep ourselves in perspective, keep ourselves reinvigorated, refreshed, focusing on what we're trying to do. Okay, so I'm going to try and talk a bit more about that today, refresh your trading tactics and how do we try and keep doing that. Okay. So, as I say, how can we stay reinvigorated, maintain the holiday focus, maintain the perspective, and keep some space between you and the market, because that's very important. Okay, enough of that. I know you're all jealous of my holiday, but here we go. Let's have a look at the markets. Okay, so if we come back to the Dow, the Dow's all of a sudden under pressure and the Nasdaq's ticking high. So we've got a bit of a turnaround here at the moment. So you can see the Dow here, it's just struggling up here at about 34,000, not doing so well. Mixed down here, momentum sort of disappearing down a little bit, so it's struggling a bit. The S&P, it's looking okay. It's testing resistance at the moment at R1, and it's looking pretty good. We've got some fairly good volumes here. It's above the average, and momentum's looking pretty good. So those overseas markets, especially not the Dow, but the S&P and the Nasdaq, they're looking okay. And the Nasdaq again is killing into this resistance up here, which is around about 12,500. It's now moved up to nearly 13,000. So we've got another resistance level here, but it looks good. Look at your volume down here. Look at your momentum. So I'm quite happy about that, and some of our techie stocks are doing quite well, which has been really refreshing, because we haven't had a lot to hang our hats on with what the banks are doing and the big miners are doing. So it's not been so good. Anyway, we'll just go to the commodities. Gold. Okay, it's struggling at this high of 2020 or 2050. It's come down a little bit. It's not over yet, but the sellers are certainly testing this uptrend move, and we've seen a couple of our gold stocks disappear off the target range at the moment. So we're again, we sort of look like we're having a break. Now it's falling back again. So if we look at things like copper and Brent crude, also the pressure's down here on copper. Sellers come back in, momentum's falling flat, trend has moved back to down again, and we've also got Brent crude again. Last night, a little bit of weakness below the low there. It's not looking all that flash at this stage, so the trend is still down from crude. It's down from 120, it's down around 73 now. We've got volume mixed there, momentum's pretty weak, so it's not looking all that flash. Okay, so that's your overseas markets. I think what we take away from that is the techies is the spot to be at the moment. Okay, so let's have a look at our market. The S&P ASX 200. It's up near its highs. I think I mentioned in the newsletter this week. It's interesting that the market has been falling flat. It's been struggling with those big stocks not moving so well, but we're not that far away from the highs. So take a little bit of heart from that. We're not disappearing south at the moment. There is still some positives there. So we'll just have to we're sort of in mid-ground here at the moment, which makes it a little bit tricky. So again, picking the eyes out of the market is what we've got to do. And admittedly, we've got a lot of small trends which have not gone on. They've been stopped out, and that's the important thing, is we haven't let them get away from us. But we have got some good stocks in there, which I'm going to have a look at today, which are producing some good gains for us. So firstly, what I want to go into is firstly the top 10 trend intensity ratings. We've got some of those ETS, FANG, MOAT, QUAL, HGPN, RBTZ, all doing pretty well. NDQ doing pretty well as well. So there's a few there in that sector, as I said before, in the techie area that's doing quite well, and some of the associated techie sort of industries as well. Here we've got Technology One, which is doing well. You can see that there. It was the highlight of our newsletter this week. It's done so well for many years, and it's doing well again. We're up about 41% on this stock at the moment since its recent break. Webjet is still moving higher. We're going to look at our WiseTech. Altium is also there as well. So that's the top 10 at the moment. Not looking too bad. Stock pick count is not really motoring at the moment. It's struggling, which is not surprising. We're up 1 to 53. In fact, I think it should be down 1 to 53 since I was here last 2 weeks ago. 45 stock picks of 160, 8 ETFs. So we've got to pick up in the ETFs there, which has been good. On the portfolio side of things, our conservative portfolio has moved up to 8 out of 20, We had a couple of newbies in there in the big area, so that's quite good. 8 out of 20. So we're at 40. So I said 405 there. Should be 40% equity, 60% cash. Our Energizer 5 stock is 100% still at 5 out of 5. The 10 stock is still 10 out of 10. So they're still motoring there. Not really kicking along the gains too much, but it's okay. We're still in positive territory. The Energizer 5 from August 20 is 5 out of 5. It's doing 9.5%, and the Energizer since March 21 is 4 out of 5. So we've lost one there, 80% equities, 20% cash, but still in this difficult market, we're still holding our own at the moment. This portfolio update should have been updated because I've been away on holidays. I'm sort of pushed this through fairly quickly, so I might have there might be a couple of minor errors in there today for you, but we'll get back to normal next week. Okay, so that's all I want to say there. I also want to mention to you, don't forget our free blog, which I've just updated again this week. Lots of articles on discipline, processes, probabilities, portfolio management, psychology, and some good books to read for you. And of course, managing risk. And the important thing is minimising losses, especially in this market. So current market is a good time to build your knowledge and get educated and not reckless or greedy or fearful. Maintain your poise and control. So it's all about, making sure you do your research again, take a step back, know what you're doing, make sure your plan is right, and you'll do a lot better rather than getting involved in the day-to-day stuff. So keep that back there a bit. Okay, and in trading tactics, I will mention a little bit about the reinvigoration process. Okay, so let's get into some stocks. I've done the top 10 trend intensity ratings. Okay. Last week we covered quite a lot of stocks. This week it's going to be a small group of stocks because I want to keep focused. Okay. So first off, we're going to go. This one's got independent strength, which is showing pretty good sign. It's rising in a fairly weak market. Telstra's doing quite well. It's broken out of this range. We had a good uptrend here during 2021, sideways for 2022, and we're hoping for a good year in 2023. So its trend intensity rating is 8. It's breaking higher in a down market, and it's a good sign. There are some stocks showing some independent strength, which I will go through today. So we see some great volume here pushing this break up here. Momentum's positive. It's above the average, and it's just sneaking higher bit by bit by bit. So we'll just let that happen, and hopefully it will continue. So trend intensity rating is 8 for Telstra, and it looks very interesting, I think, at the moment. Qantas, well, we saw that QC, the KC King's Council last week, a couple of weeks ago, talking about how he wanted to take them to court over all this money we can't get back and the cancellation of airfares. In fact, a mate of mine just went to England on Friday, and he had his plane cancelled twice, and the last one was midnight before the day he was about to go. It's really not that fair, but that's what they do. And the fact is, Qantas is still making money and still going higher. So go figure, but that's the way it is. Trend intensity rating is +7. The volume is mixed here. You can see plenty of sellers in here, and momentum is slowing, but we're above the average and the trend is up, so we still have a trend intensity rating of +10. So that's our perspective business that we need to have on the stocks. Okay, so trend intensity rating is always a good thing, just to take us away from the emotional side of it and see exactly what the technicals are telling us. Okay, so that's a couple of the leaders I want to go through. Trend reversals. We looked at Webjet. It's also been running pretty well. Since it broke, had a good trend reversal out of this big sideways pattern here, sort of a major trend reversal from this low to this low, and this is the high here. It's now broken up. Now, if we look at this here, it is going high, but we have very light volume, momentum. They're all really sort of, flat and not looking at a lot, but the trend intensity rating is still +10, believe it or not. So that's really quite important, and that's why we need this rating, because it does tell us what these technicals are telling us, even though it might be a little bit hard to read, and we could be a little bit negative in our own little emotional mind. So for the moment, Webjet continues higher. 10 intensity rating of 10 was of last week. I know it's come back a bit this week, but we'll see what happens by the end of the week on Webjet. So that looks interesting. Boral, it's also been kicking higher, nicely higher, and we're looking for this one to continue up. Let me just blow this up. After the Stokes takeover, it had a bit of an accumulation pattern, but it's broken out nicely and continued higher. Okay, so that's a very good stock. Boral. Trend intensity rating is 8. Higher highs, higher lows, above the average. Volumes mixed. momentum's positive, trend intensity rating of 8. So keep an eye on Boral. That's one that still keeps rising. And when I look at this little pattern here, each time it comes down, it gets whipped up. So there's a good support for Boral at the moment. Okay, now the other one here we've got on the new high front is NHF, which has now broken out of a big trading range here, breaking to a big high here. So this really is quite a significant break up for NHF. If we go and look here, the break up here resumes a long-term uptrend for NHF. The trend intensity rating is 9. It's been very sharp this rally, very good volume, very good momentum. So that looks very good. Who knows what's going to happen, but all we do is we base it on what we see now, and the trend is up, and that's what we follow until we're told otherwise. So we have our stop in place, and we just run with this one as best we can, and who knows where it will take us. Boring old insurance stock, but there you go. It's one it's on the winner's circle at the moment. Okay, WiseTech is the other one which I'm just looking at, which I just watch every week. It seems to go higher and higher. This guy can't tend to do much wrong. We had a good correction back here throughout 2022. It came back and found some good support above this high here, which was a good sign of strength, and then rallied through here. And really, for the last 2 or 3 months, it's been up and up and up the whole time with a trend intensity rating of plus 10. Okay, so that's WiseTech. It looks good. It's continuing higher, so we run with that as well. Okay, now a little one I want to talk about. It's a little bit of left field, this one. It's called My Holdings. Now, I don't actually cover this one because it's too small, but I've just been looking at this one today, and I see what happened. The last profit report was very inspiring. Solomon Lew's on the register there. He's lurking there. The dividend is in fact amazing for this stock, and I don't think it's going to be changing that much again. And the stock has now retraced about 50% from those highs. It got very excited when it broke up here, and now it's come a long way back. Now I've been looking for this market to be supported around here. It's come back about nearly 50%, so I'm looking for support here. There's still some selling going on, and momentum has dived quite significantly, but you know, if you want to have a little bit of a play, this one may well be worth looking at, and its name is Myers. Okay, so maybe we finally turn the corner on that one with the new CEO, and we'll see what happened there. Which will be interesting. So check out my trading center. I've got lots of other stocks in there for you to have a look at. If I look at some of the opportunities on the trend reversal basis, we're looking at things like Flight Centre, AGL, Orica, James Hardie, even Tabcorp, and a little stock called Hello World, which is also making interesting. On the new high front, we've got things like Medibank Private lurking, Brickworks, NSR, Cochlear and CSL, which are probably more long-term things, but they're also lurking there as well. So there's certainly things to watch for you out there. Okay, so just now to go quickly to trading tactics, which is a very brief one today. It really is just about maintaining this refresh. I've got this really, am I being invigorated today? Because I feel like I am, because I had such a good holiday and I'm excited about that. So, I think it's trying to maintain that sort of freshness and that ability to keep your perspective and keep your step back, because I have had a good step back since I've come back, and it's been interesting to do. So trying to maintain the holiday focus and maintain the perspective, keep space between you and the market. Now I only update myself weekly basis, so that gives me a little bit of room to step back and have some time off and time away from the market, and it helps to revisit my basic premise, which is to follow trends and new highs. That's all I'm really looking at. So I don't want to get too close to everything. I want to make sure I have some perspective there, and I am reinvigorated. So there we go. Refresh your trading tactics, and hopefully it will improve what you're doing. So I'm refreshed after a good holiday in Ningaloo. What an amazing place it is. Perspective on the state of the world, well, it is interesting, and I don't know if you've watched Tim Winton over the last couple of weeks. He's been doing an amazing show on iView. That's certainly worth watching. So I'm focused on real trends and new highs, and that's what I'm doing at the moment. So I hope you're all well. Stay safe, watch your trends, heed your stops. As always, give me a call if you need any help, and I'll be here again next week for some more insights for you, okay? Thanks very much.